Hello, everybody. This is Mark Newton. Today is the 11th of September, 9/11. Thanks for joining us. So, second straight day of gains for equities. You can see the pattern on S&P is largely proven to be very choppy over the last 5 or 6 weeks. So we had our initial decline from July, the rally attempt which failed, and then a big pullback, and now we're trying to rally again. So this week has really important economic data. My thinking is this will be resolved in one way or the other. I am taking a more of a defensive stance just based on the fact that yields across the board are hovering right near highs. And, a couple of the cycles I look at do suggest that we could have potential weakness for September, which would align directly with seasonality. Now, when I look at yields, for example, on a weekly TNX chart, still very early to have any sort of counter trend sells. We do have, TD sequential is largely stopped out. We have a TD setup count that's right near former highs, but the combo count remains at least 3 weeks away, and I think that's important. When you look at a monthly TLT chart, you notice that we're on an 11 count, so we easily could go down to new lows here. That would form 5 waves off the peak from 2020. That would be a very meaningful low in the short run for treasuries, and treasuries would likely start to rally throughout the course of the next year. For the time being, it's really difficult to make that case, and we look at really everything with regards to yields, and we just haven't really seen sufficient evidence of breaking down. 10-year got down to 405. That was close, but certainly not enough to really break the ongoing trend. And so, I would invite people just to make really a close look of this chart. And, until we get down under 405, it's really going to be difficult to trust any sort of S&P bounce that we get. And a lot of that is just given this ongoing correlation that we're seeing between treasuries and equities. So yields going up on weaker than expected economic data, or on stronger data. When yields have been rising, of course, that's been a negative for equities, thinking that the Fed has to continue to hike. And when the economic data comes in soft and yields roll over, then that's a time when markets have been moving higher, equity markets. So, we remain in this environment where bad news is good news. And right now, that doesn't seem to have changed. So I do think this week's CPI and PPI data could be important. We'll see what lies ahead. But I need to see more evidence of yields breaking down. And the cycles that I showed late last week, even the one I'm going to show tonight, shows a potential for some choppiness over the next 1 or 2 weeks before we start to turn higher into October. So I really want to, just reiterate that with regards to the S&P, we really cannot afford to have much failure here. If we were to start to have strong data in the next couple of days and equities turn down and take out these prior lows of 44.34, then it is going to be likely that we test the lows from August. And that might not what people want to hear, but that is certainly a very big possibility. But we see here on S&P futures, we've gotten right up to last Friday's peaks, which is right near 44.71. So that's going to be important for futures. For S&P cash, of course, I put some levels in tonight's report you want to pay attention to. The final thing I just want to cover is what's happening with gold and silver stocks, because really, a lot of people have this vision that the fall is a time for big rallies in precious metals, and it coincides with a time of, a demand for gold, specifically out of India and wedding season, and we see huge run-ups in gold and silver, and unfortunately, that just doesn't happen as frequently if yields are pressing up, specifically real yields. So, we need to see some evidence of that turning back down. But we see the average returns for September, just based on gold, is likely, it's right around negative 6.5%. And that's XAU, which covers gold and silver stocks. That's not gold per se, but that's the gold and silver mining index from Philly. And it shows that both August and September are difficult months. And then we get a little bit better as we head into the fourth quarter. So I think that likely should also materialize this year, specifically because I think that's a time when the dollar and also rates can start to pull back. So we'll see if that happens. For the time being, we are at sort of a key level, not only with regards to equities, but also treasuries. So next few days are going to be important, and I will certainly be really highlighting what's happening, and we'll try to do our best to try to pinpoint the path of least resistance. Thank you for tuning in, everybody, and have a great night. Take care.